Welcome back to another episode of the top 3 option plays for the week. This week is kind of hard to find some plays that I wanted to put on because there's a lot of earning plays coming up within the next couple of weeks here. And as you know, I'd like to sell 30 to 45 days out the majority of the time. So it took me a while to actually find these ones, and even this is kind of reaching. I tend to find sitting out of earnings is the best play altogether, so be careful because earnings season is here, and a lot of tickers have earnings coming up, and that's when things can get volatile. It also presents some high premium, which is tempting to sell some call spreads or put spreads on. So first play I have here is more so for my IRA. Uh, Realty Income is a company that I would not mind owning in my IRA because I would take assignment of the stock, collect a dividend. Since it's in a Roth IRA, I don't have to pay taxes on that, which is why I prefer playing O in my IRA. And basically, I feel like it's a safe stock to do in my IRA because I don't mind sitting there collecting a dividend while I still cover calls against it. Now, the thing I don't like is that Realty is already up to 71.75. So playing a strike around the 67 mark is going to pay a little premium. It's still better than nothing, but it's not going to be as high as I'm used to seeing. So as you can see, recently we've had a downtrend and now we're going back up. Ideally, you'd want to be below 65 on a strike if you don't want to get assigned, but you're going to have so little premium because that's just how O works. You have to probably look at the 67.50 mark, and you do have a risk of being assigned there, especially since we have earnings coming up. And if you look at previous earnings, it does tend to move a little bit during that time. So only play this if you're truly okay with owning the stock at 67.50. And looking at the puts, I want to switch to the next cycle. And the 67.50 is going to be paying about 25 cents per contract. So that's about a 0.5% return for a 26-day hold. Not fantastic, but not horrible either. That's more than a savings account right now, which is basically fine for my Roth IRA because I like to go with safer plays in that area. All right, so the next play up on my list here is IBM. They went down after earnings, dropping all the way down to like 127, and that's a pretty big gap down. But looking at the 1 year chart here, you can see there's a lot of volume at 140, a little support around 120. And so what I actually wanted to do is I wanted to go long on this position. So I actually bought some leaps at the 100 strike. I paid about $34 for that. So I paid about $100 extrinsic value when I put those on. But since then, IBM has continued to drop down, so you could get into that position for a better price. Now looking at the 2 year 1 day chart, you can see that there's a lot of volume at 120 even. So I don't think IBM's going to go much further down than it is right now, which I think is just an excellent opportunity to buy some leaps and set those up for some potential PMCCs or just earn some wins from a long-term call here. If we go to the trade chart here, so looking at the options chain, if you're going to buy a leap, I would go up further out in time. It gives you plenty of time for the stock to make a move back up. And you want to look for something that has low extrinsic value. And basically, that's the time value you're paying to enter this position compared to if you just bought the shares of the stock, which is pretty cool. Right now, the 100 strike, which is what I went with, the extrinsic value is up to about $230. So you're paying think about it as like renting. You're paying out $230 in extrinsic value in order to control 100 shares of IBM. You could get a little safer now, get a higher delta. You want to make sure, or at least I wanted to make sure it was around 0.8 delta, which at the time this was. So 80 delta or higher is what you're aiming for. That way you benefit a lot from the stock when it moves back up. And then later, if you wanted to, you could turn this into a PMCC and sell short calls against it. But I'll wait for IBM to go up first before I start doing that. Another play you could do is decide to sell a put. If we go back to the chart here, we'll go back to the 1 year, 1 day. And if I'm going to sell a put, I'm going to find some place where there's going to be support at. And if you look at the volume profile over here, you got some volume happens at 128, 124. So I'd say get below 124, maybe even like this dip here, 120. Let's go see what the prices look like. So looking at the options chain here, I think the 120 mark could be good. We're looking at 20 delta, so 19% chance of it being out of the money. You get about a 1% return for a 33-day hold. And worst case scenario is you're buying 100 shares of IBM at 120, or you end up just rolling it to chase the stock down. So last but not least, the third option we have here is KMB. KMB is one that I actually own some leads on already, and I think it's just trading a nice entry point for buying some shares, which is why I'll be looking to sell puts. Now, what's unique about this one is we have earnings coming up Monday before market, so it's a little harder to figure out exactly what you want to do to sell on the position. But what's good about it is I'm fine with owning KMB at these price ranges, so we'll take a look at what happens. If we look at the 2-year 1-day mark, you can see KMB tends to trade above 128 to 135 or 138 here, like at all times. So we're trading in the middle of that range. I wouldn't expect it to dip too much, but if it does, that's just more opportunity for us. All right, so looking at the on-demand feature, I had to go back to see how KMB acts after earnings to see what the premium is like. And what I was finding was 24 to 20 delta range tends to be about where you get 1% for like a 35-day hold. So if KMB goes down, I'll be looking to sell a put at the 20 to 25 delta range. If KMB goes up, I'll see what the 132 range is paying, and if it's around 1%, I'll try to enter that position. But if KMB goes up, this is probably gonna be a stock that I just don't do anything with. Kind of hoping for it to go down to provide a good entry point for selling a put. With all that said, I'll leave you with this little piece of nugget. Don't feel like you have to put on a trade every week. Sometimes being in a cash position is good so that when the market does provide a bigger opportunity, you have the cash available to jump on it. Thanks for watching and good luck trading next week, guys.